if you want things to be different in your life this year financially, you have to firstly possess the desire to set about achieving those things that you want differently in your life financially. But you also have to go through a period of adjustment. You have to adjust some of your financial priorities so that you can redirect some of that financial energy, the money, into building your warehouse of wealth. And to our clients who have been practicing this process for years, you're the folks that have been reaching out to us saying, we heard you say, even though we were in the lowest interest rate environment that we've ever been in, we had record low borrowing rates, we had record growth in the stock market, you couldn't make a mistake in buying real estate if you tried. And we heard you saying and shouting from the rooftops, when the lever goes the other way and interest rates start to climb and we start to see increased inflation, if not rapid inflation, you're going to be shielded from that. What it made me think about, the reason why we've named tonight's talk Wealth in Overdrive, it brought me back to my thinking around, if I can take you all back to March of 2020. We were right on the verge of lockdowns and we were right on the verge of everything, the Canadian economy, coming to a grinding halt. I met with my teammates and I said, whenever there's an absence of control, there are two emotional states that you might find yourself in. The first one is fear, and the second is anger. If you think about the last time you felt anger, I can assure you it's because you weren't getting something that you want. You weren't getting something that you need. That's what triggered the anger response. And when you're in a position of fear, that fear is a result of an absence of control. And so your emotional state is going to take you to one of those two places. And what I was sharing back in March of 2020, when I met with my team, I said, I do not know what's going to happen. I want you all to know that you can feel comfortable discussing the fear, discussing the anger, whatever's coming up for you. But I'm in neither one of those two places. I'm not in fear and I'm not in anger. We have to make a choice. We can choose to advance or we can choose to retreat, but we can't do both. So pick one right now. And that immediately changed how all of our teammates were thinking. So when they rethinked their thinking and said, okay, we want to advance. Of course we want to advance. And I shared with my team in that moment, I said, you know what? Here's my solemn commitment to each and every one of you. Every one of you who are on the team today are going to be on the team today next year. So I want you to stop worrying about your income. What I need you to be 3,000% focused on is serving people and helping them navigate and get out of the fear and get out of the anger so that we can make real progress. Our business doubled in 2020. It doubled again in 2021. You can only imagine what would have occurred if we succumbed to that fear or anger. The complete opposite may have occurred. And so everything begins with the way that we think. And as we head into 2023, there are a lot of people that we've been interacting with since the onset of this new year who are incredibly excited. They've been practicing this process for a number of years, and they know that their wealth that they're building, that warehouse of wealth, A, it can't go backward. B, it can't be repossessed. C, it can't lose value. And so the folks that we're talking to are in a state of optimism, in a state of high ambition, wanting to achieve great things this year. Regardless of where you are financially in your life right now, today, you are already allocating 100% of your financial resources, your money, to everything that you have prioritized. And so if you want things to be different in your life this year financially, you have to firstly possess the desire to set about achieving those things that you want differently in your life financially. But you also have to go through a period of adjustment. You have to adjust some of your financial priorities so that you can redirect some of that financial energy, the money, into building your warehouse of wealth. And the whole point is either A, if you're new to this journey, you've got to take action and get started. I can't tell you how many people I've met with who have said this. We've been stalking you on social media for the past several months, and we think we're ready to go. If that's you, get started. And if you're already in your journey, amplify what you're already doing. Take a look at where 100% of your financial resources are prioritized presently and take a tiny bit more of that allocation and reprioritize it so that it goes into your warehouse of wealth, not someone else's. And to our clients who have been practicing this process for years, you're the folks that have been reaching out to us saying, we heard you say, even though we were in the lowest interest rate environment that we've ever been in, we had record low borrowing rates, we had record growth in the stock market, you couldn't make a mistake in buying real estate if you tried. outside and we heard you saying and shouting from the rooftops, when the lever goes the other way and interest rates start to climb and we start to see increased inflation, if not rapid inflation, you're going to be shielded from that. And people said, we just didn't really conceptualize it at the time because that wasn't our financial reality at the time, but it is now. There's going to be an abundance of opportunity for you to amplify what you're already doing financially. There's going to be an abundance of opportunity for you to take advantage of really, really great opportunities in the real estate space. If you're interested in owning companies in the form of common stock, companies that you buy products and services from regularly, you're going to be able to pick up some of that stock at a discounted price. And I've had people ask me, what are your thoughts on investment in the stock market? How is that played out for you? Is that an investment strategy that you deploy in your own life? What I do, and this is going to sound ridiculously simple, but I take a look inside my pantry. I take a look inside the medicine cabinet in the bathroom. But if you think of, regardless of what's going on in the economy, I still need to shave. I'm still eating and consuming very same goods that I'm accustomed to. When we get a headache, still take Tylenol. Think of all of those products that you've been utilizing throughout the course of your lifetime and ask yourself, hey, when the economy was receding or there was volatility in the market or there was political turmoil, did I stop utilizing those goods and services or did I continue? And those companies are going to continue to do extremely well. And so if it's your desire to have a common stock interest in those businesses, you're not buying it because you think you're getting the best price. You're buying it because you understand that it's a durable business that's going to continue operating no matter what's going on in the economy. And it's going to continue generating profitable sales, profitable revenue. And you as a stockholder are going to receive a dividend from those companies who declare and pay dividends. You can take those dividends and reinvest them right back into more stock. And the stocks that had started purchasing at a very early age, the moment that I could purchase them on my own, were stocks of companies that I still consume their goods and services to this day. Intel, Microsoft, Johnson & Johnson, Altria, Kraft, the list goes on. I haven't put a penny more into any of those common stocks. I just reinvest the dividends. And those account values have become enormous as a result. And so just think about that if that is a strategy that you want to pursue. But here's the deal. If you're not controlling any portion of the banking function as it relates to your needs, that's where you should begin. Before you look at other investment strategies, you should take control of the banking function as it relates to your needs. Well, how do you do that? You do that by implementing the process of becoming your own banker, the infinite banking concept. This 92-page read is going to take you less than an afternoon to get through, and it's going to open up your eyes to a whole new financial world. And for everybody who's already read Nelson's book, I'm going to challenge you to read it again. Nelson said often, the more you see infinite banking concepts, the more you'll see you didn't see. And that is true even for myself and for all my teammates who have been practicing this process for many years. Every single time they read the book, they learn something new. Every single time, without fail. Read it again. And then once you do that, get in touch with your coach at Ascendant, the advisor who's leading you through this implementation, who's coaching you and mentoring you. Schedule a time to talk about your insights and what else you've learned from reading the book and how it's inspired you to want to grow your family banking system. Because the more of that function you control, more peaceful, stress-free way of life you'll achieve. It's really that ridiculously simple. And when you achieve a financial point in your life where you no longer rely upon conventional bank for anything other than the convenience of debit, what a peaceful, stress-free way of life that is. I want you to examine your thinking about the year ahead. Everybody talks about, hey, it's a new year. Well, what is that going to mean for you? Is it just going to be another year? Or do you want to build a future that's bigger than your past? And the good thing about constructing a future that's bigger than your past is that you get to decide what to bring with you from your past into that bigger future. And you get to decide what to leave behind. And there's a reason that I want to lead you through this very important question. And I want you to take a moment and I want you to be thinking about if you and I were sitting down and having a meeting together and it was December 31st, 2023. And if you were to look back over the course of 2023, what specifically has to have happened in order for you to feel happy about the progress that you've made? For people who do not understand the vital importance that banking plays in your life, what you are typically looking for is the next best thing that you could be doing with your money. Give me a strategy. Where should I be putting my money? If you want to speculate, that's your privilege. There are a lot of people who are very comfortable speculating. Whether they speculate in real estate or they speculate in the stock market, that's your privilege to do that. But my question to you would be, capture precisely how much money you're comfortable losing. Rather than think about what you anticipate your gains are going to be, write down the number that you're comfortable losing. And then that remaining sum of capital, you should be redirecting into controlling your own banking function. That money has to reside somewhere. And when I talk to folks who are in the stock market, who are in real estate, very active in their business, maybe purchasing other businesses, I ask them, now that you understand the characteristics of the tool, dividend paying, participating whole life insurance, and you understand that the more capital you put in, the more capital you get out, you attract no taxation on the buildup, zero taxation on the buildup. There's no taxation on the payment of the death benefit proceeds. The value can only go up, it can't go backward. You have ready access capital to take advantage of high caliber opportunities that will track you down. Logic begs the question, how much of your capital do you not want residing there? Because when you talked about investing in real estate, you talked about other people's money. OPM. Well, guess what you're doing when you access a policy loan? You're using the life insurance company's money, OPM. You're not using your money. Your money is still residing inside of your warehouse of wealth, and it continues growing uninterrupted by the use of OPM, other people's money. The difference is that when you have a policy or a system of policies and you're utilizing policy loan to take care of your real estate investment activity, you co-own the lender. You co-own the life insurance company, the very institution that's lending you the money, and you're borrowing it on your terms, not someone else's. That's powerful. That's an advantage. And then from that very place, you can initiate all of those other strategies that you want to pursue, whether it's trading, real estate, buying businesses, investing in insert, whatever that is here, investing in general. From this very place, you can conduct those activities. But like Nelson taught us, you should not ignore the fact that someone and some organization must control the banking function as it relates to that thing that you want to do, to that strategy that you want to implement. And so that someone should be you, and that some organization should be the life insurance company, not a conventional bank. That's the power of this process, that regardless of what's going on in the economy or with interest rates or taxes or all the above, the process of banking goes on no matter what. And so when somebody asks me, hey, can you give me the very best strategy that I should be implementing? Yes, I want you to take control of the banking function as it relates to your needs as step one. So this is a sequence of steps. Take control of the function, and then from that very place, carry on with your ambitions to invest or whatever it is that you want to set about to do. This may be their first exposure to infinite banking. We're hearing terminology that we're using, right? Policies and process and recapturing the banking function and reclaiming it from outsiders and taking care of that in your life. And some people asking themselves, okay, I don't understand what this is, but can you explain that to me? Can you elaborate on what that is? So the essence of the infinite banking concept, process of becoming your own banker, is to recapture the interest, the money that you pay to banks, finance companies, credit card companies, for all those things that you need to purchase throughout the course of your lifetime. And so if you were to think for a moment about all the money that you have spent up to this point in your lifetime, and it doesn't matter what you spent the money on. I just want you to run that scroll through your mind of everything that you've spent money on. Could you write me a check for that amount of money right now? The answer is absolutely not. All of that money had to come from somewhere. And so you've been earning an income. You've been earning a T4 income. Maybe you earn interest income. Maybe you earn dividends, a combination of all three. Is it not true that at present, all of that money is flowing through the books of someone else's bank? 100% of it. And while you think that the bank is letting that money sit still to wait for you to pay your bills, pay your property taxes, to take care of your car insurance, your home insurance, again, all those things that you need to spend money on, the bank is not letting that money sit still. The bank is putting that money to work for the benefit of the stockholders of the bank, not the depositors who left the money there. And so what we want to do is recognize, first and foremost, that that's a problem. So once we understand that there's a problem, the solution that we are going to describe for you now is actually going to matter to you because you understand the problem. If you didn't understand the problem, the solution just won't matter to you. The solution to the problem is to take control of that banking function. And it's ridiculously simple once you know how. You take money, you pay premium inside of a dividend-paying participating whole life insurance policy, or a system of policies, ideally, where you insure your life, your spouse, your children, your grandchildren, your nieces, your nephews, your business partners, your joint venture partners, and so on. Those policies immediately begin to accumulate cash value, and that cash value is equity in the policy, and you get to borrow against that equity on demand on your terms. Think about the last time you dealt with a conventional bank and you needed to borrow money for a house, a a car, business equipment, whatever it was that you were planning to purchase. Was that experience seamless and easy and without friction, without tension? You likely did not have the best of experiences because you had to verify your income, authorize a credit check, you had to personally guarantee the loan, you had to repay it on someone else's terms, not yours. And that can cause of stress for people. That can be a cause of anxiety for people, especially if you need the money and the bank's not agreeable to lending it to you because you don't meet their underwriting criteria. You're not credit worthy. That can be a real source of stress. When you implement the solution that I'm describing, you no longer have to deal with those tensions or frustrations because when you request a policy loan from a life insurance company, the life insurance company does not ask you, what do you need the money for? Can we verify your income? Can we run a credit check? And you, as the policy owner, set the repayment terms of your own policy loans. That puts you in a position of total control, especially when you understand that all of your money is still growing inside of the policy uninterrupted. Nelson Nash, the developer of the concept, the process of becoming your own banker, when he described in his teaching throughout the years, when he said, look, the fact is your money must reside somewhere. That's a fact. And so if you understood the characteristics of this warehouse that I just described to you, the life insurance company, and you understood that you become a co-owner of that company, when you put a policy or a system of policies in place, you co-own the company and you participate in the divisible profit generated. You don't have to hire anybody, performance manage anybody. You don't have to make any day-to-day operating decisions. You don't have to take risk and invest any of that company's money. They handle the investment function and they do it extremely well. All that you need to do is pay your premium and you get contractually guaranteed daily growth. You get ready access to capital on demand on your terms. Not if, but when you die, there's a tax-free windfall that's paid to your named beneficiaries that bypasses probate, bypasses the estate, and goes right to those beneficiaries when it's needed the most. You pay no tax on the daily buildup of money. How much capital do you not want residing there? I was just doing a talk in Lake Tahoe. I was speaking to a group of entrepreneurs and I asked everybody in the group, raise your hand if you feel like you're not taxed enough. And would you believe it? Not one hand went up. When you look into that bigger future, do you think the government's going to need more or less money? Where do you think the government's going to get that money from? The government can create inflation and create debt. Government can change the rules as it relates to taxation. The government can create additional sources of tax revenue. Listen to that word, tax revenue. The government doesn't create jobs. The government doesn't create anything. This is a parasite-host relationship. And so when you're building that bigger future, do you want to shield more or less of your money from onerous taxation? A dividend-paying participating whole life insurance policy is the greatest exemption that exists in the tax code in Canada and the United States today. And so why do you think the government would put restrictions on how much money can go into that instrument? Because it's a terrible instrument? And here's what's interesting. You hear a lot of financial entertainers out there who describe the following. I'm going to share this with you because it's not only laughable, but it's amateur night at the arena. You will achieve a point in your life where you are self-insured and you just don't need insurance. And I want you to understand that the largest purchasers of dividend-paying participating whole life insurance are the very people who need the death benefit the least. High net worth, affluent, ultra high net worth, these wealthy individuals are the largest purchasers of dividend paying participating whole life insurance. And they're the people who need the death benefit the least. So what does that tell you? They're either really stupid and they've never met Dave Ramsey. Could you imagine Dave Ramsey sitting around a table of ultra high net worth people telling them how stupid they are for putting their money into dividend paying participating whole life insurance? He'd be laughed out of the room. His job relies upon him not understanding this. His job depends upon him not understanding this. And so if we understand that the wealth is accumulated and controlled by the minority and we continue to do what the majority do financially, what do you expect? People have little to no understanding of the vital importance that banking function plays in their lives. And people not only abdicate the responsibility of it, but they also abdicate the opportunity that becoming your own banker represents. Having all that financial energy flow back to your family versus flowing away from your family. And a fatal error is going into comparison mode. How does this compare to putting money into a mutual fund? How does this compare to put money into the stock market? How does this compare to putting money into Bitcoin or into real estate? That's a fatal error. You're missing the point entirely. A dividend paying participating whole life insurance policy is not never has been, never will be an investment. It's a unilaterally binding contract that provides you with all the guarantees that I described. It is from that place where you can go and choose and compare financial products that you want money to flow to. A skyscraper cannot stand on a weak foundation. The more capital that you have that resides inside of your warehouse of wealth that you control and never leaves your control, the stronger and the deeper your foundation becomes. And then you can build that skyscraper of financial tools and products, whatever it is that you desire, and you can build that on a very strong foundation. So I'll tell you something. This is one of many examples. This was back in July of 2019. Jonathan Prue, who's just an amazing entrepreneur. So he reached out to me and he said, hey, I'm in this Amazon business and I sell general merchandise on the Amazon platform. And I'm currently doing pretty good. Like I'm doing about $30,000 in gross revenue every month. And I said, wow, that's a pretty remarkable achievement. Good for you. He said, I really can't wait until I'm doing 100,000 in sales a month. And I asked him, I said, well, what do you think you need to get from 30,000 to 100,000 a month? And I knew what his answer was going to be before I even asked the question. Without hesitation, he says, more capital. I said, you need more capability. And what's your profit target? He said, my what? So, well, you gave me a gross revenue target, but what's your profit target? And don't give me a percentage, give me a dollar amount. He goes, I haven't established one. I said, well, all that you're chasing is a vanity metric. The gross revenue is just a vanity number. You can make 100,000 in gross revenue and have no profit. And you can celebrate the vanity metric, but when you reach into your left pocket and your right hand pocket, there's nothing in there. There's no money. And so what we want is we want profitable sales. I went through a masterminding process with him to help him rethink his thinking, to help him begin to prepare for the capability that he needed. And he said, you know what? This was about a full day exercise that we went through. And at the end of the exercise, he said, Jayson, I'd love to return the favor. I appreciate you being generous with your time. Let me open up an Amazon store and manage it for you. All that you have to do is put money in to buy general merchandise, and I'll make sure that we generate profitable sales. And I said, well, John, I'm only going to do it on one condition. You have to split the profit with me 50-50. He was fully prepared to do this for nothing. He didn't want anything in return. And I said, I'm not going to allow you to do that. This has got to be a win-win or I'm out. I'm just not interested. And I was more than happy to spend this time with you. And John said, you know what? That sounds like a good deal to me. I'll take it. I began to request policy loans, and using the life insurance company's money, we purchased a lot of general merchandise, and that merchandise started to sell profitably, and money was coming back and then getting reinvested to buy more general merchandise to sell to more captive customers. Does that sound like the grocery store example in Nelson's book, Sarblo?
Oh, yes, 100%.
That business, I asked him, I said, who do you know in the Amazon space that's doing really well? Give me the number, give me the vanity metric. And he goes, wow, there's this guy that I've been networking with. His name's Bo, and he does 400,000 in gross revenue per month. I said, so why did you set your target to be only 1/4 of that amount? Why not 401,000 a month? What's preventing you from doing that? And it just so happens that it's a small world. One of my colleagues in the United States knew Bo. And so he put Bo in contact with me, and I understood a little bit more about how Bo ran his Amazon business. And we sent Bo a box that had a bottle of Windex, paper towel, and a handwritten note that read, hey, Bo, make sure your rear view mirror is nice and clean so you can see us coming. And Bo, obviously everybody got a good chuckle out of that. But fast forward to today, after all the policy loan activity and growing that business and putting equipment and resources in place, that vanity metric this year, that business is going to do 15 million. And that would not have been possible without becoming my own banker. So this was a high caliber opportunity that I was able to take advantage of because I had ready access capital. I had a high caliber opportunity. All I had to do was request a policy loan, and I got to repay that on my terms, nobody else's. This can't be achieved overnight. This is not meant to be hey, I'm gonna purchase a policy and then overnight I've become my own banker. No, it's meant to be achieved gradually and incrementally over a period of time, because regardless of what your degree of experience is or exposure to this process, you're going to need the use of money for the rest of your lifetime. And that money has to come from a supply source. And if you continue to carry out your financial dealings the way that you've been doing it up to this point in your lifetime, every payment that you make on debt is someone else's passive income. Let that sink in. And so you want to redirect that. And if what I'm saying to you, if you're catching this, if you're saying, okay, obviously I need to understand more and have more clarity about how this could work in my life. But if you're catching this problem and solution, you've got to book a time to connect with the right person on my team. And there's a remarkably simple way to do that. If you text the word schedule to 780-809-4599, you're going to be able to meet and get connected with the right person on my team. The meeting is on the house, no charge. Nobody's going to try to sell you anything. I want to make something very abundantly clear in our approach. If you think of a transaction, when something is sold, you've got a buyer and you've got a seller. And Sarblo, when you understand those two characters, which character gets to do the rejecting?
Well, the buyer.
Buyer. In our approach, we're just a little bit different. We are the buyer, not the seller. So we get to decide whether or not you've established a basis to work together. And there has to be a good fit there for you too, of course, right? You have to feel that there's a really good connection there and that you can establish a great coaching relationship. But we're the ones that ultimately make that buying decision, not the other way around. That has enabled us to continue to attract the people that we most love to serve, people who possess the optimum mindsets of the people that we most love to serve. You don't need to deal with Ascendant if all you want to do is purchase a dividend-paying participating whole life insurance policy. You can purchase that from any life insurance agency in the country. But if you want to take control of this banking function as it relates to your needs, and you want to build a bigger financial future that's much bigger than your financial past, and you want to develop and create that peaceful, stress-free way of life financially, then we would absolutely love to hear from you. And we would love to have that conversation. Back in April of 2008, you could still get a 40-year amortization schedule on a mortgage. And when my wife, Rebecca, and I moved back to Canada, because I was on an international work assignment at the time, I was a senior partner with Dell. My wife and I were living and working in Tampa, Florida. And when we got pregnant with our firstborn, we decided to move back to Alberta. And the home that we purchased, we thought, oh my God, this is fantastic. Got a 40-year amortization schedule. Interest rates were remarkably low. And so I was pretty proud of myself. I was like, hey, this is really good. And you know what I was going to do at the time, Sarblo? I was going to accelerate my mortgage payment. I was going to put my mortgage payment in overdrive. I was going to send an extra $200 every month to accelerate the repayment of that mortgage. I had no idea what the problem was. I had no exposure to becoming your own banker in April of 08. My first exposure wasn't too long afterward. It was in July of that same year, but I had no idea what the problem was. So if somebody would have sat down with me and said, hey, Jayson, you should purchase dividend-paying participating whole life insurance policies, and then you should begin to implement a process and become your own banker, I would have said, what are you talking about? I got all my money in really good stocks and I got all my money in RSPs. What are you talking about? But if somebody had come to me and said, Jayson, do you understand that every payment that you're making to that conventional bank is a permanent transfer of money away from you? You can't earn interest on it, can't use it again. It's not only permanently transferred away from you, but it's also permanently transferred away from every generation that comes after you. Do you understand, Jayson, that that's a problem? I would have said, you better believe it. And if somebody would have clarified for me, hey, Jayson, do you understand that you're earning a whopping 0% on the equity in your home? All that you're doing by sending an extra $200 of your money every month to the bank is you're saying, hey, Mr. Banker, don't worry about going out to find another borrower. I'm just going to send you a bunch of extra money. And do you know they hate you for doing that? They don't like that. The banks do not like it when you're paying off stuff early. They do not like that. What I discovered in July of 2008, and then when I began to implement this process in our lives, I got pretty aggressive with it. I started putting money into these policies, and then I was borrowing in the form of policy loans and taking that money and going down to the conventional bank and saying, can you take this lump sum of money and apply it directly to the principal balance of my mortgage? And the banker would say, sure, but do you understand that once you achieve a certain amount, like you're going to be subjected to a penalty? And when people hear the word penalty and they're standing in line at the bank, that can create anxiety, fear, anger. And I thought to myself, okay, well, what's the penalty? Well, it's 3 months of interest. Yeah, but how many years did I shave off of the amortization schedule? 3. Okay, so I can pay a $900 penalty and I can shave 36 payments off of the amortization schedule. I'm going to go get a coffee and you take all the time you need to tell me what you would do if you were in my shoes. We got rid of the conventional bank in 7 years, 33 years ahead of schedule. However, when I called Nelson and I said, Nelson, this is incredible. We got rid of the conventional bank and we're going to celebrate. And he said, whoa, hold on, son. Don't celebrate yet. I need you to finish the original loan schedule. And I said, could you help me understand what you mean? He said, you committed to making payments for 40 years to someone else's system. Now that you've created your own system, you're not going to honor that original loan schedule, because if you don't, your expenses are going to rise to find that new free cash flow. He said, I want you to be an honest banker and I want you to finish that original loan schedule. You're just going to change the process of who's getting all that money. To this day, we still own that property. We live in our second home now, and that original property is leased out to a wonderful family. And the payment that we would have otherwise been obligated to continue making to someone else's bank is now flowing back into our system of policies, and it can never leave our control. In hindsight, I may have done it differently. I may have utilized some of that accumulating value to go and take advantage of high caliber opportunities, maybe to grow my real estate portfolio. But my sole objective at that time was to get rid of the conventional bank. I wanted to lead by example. I wanted to get it done. 33 years ahead of schedule isn't that bad. God forbid, if anything had happened to me during that 7-year time frame, I would have left no indebtedness behind to my family. They would still own the property, and they would have a tax-free windfall of money. And so I left no debt behind. If you have any difficulty with debt, okay, so if you look at a policy loan and you say, well, in my understanding of finance, that's a debt. If you have any difficulty with debt in your life, you just don't trust the asset. That's what you have difficulty with. You don't trust the asset. And I'm here to tell you that this asset is remarkably impressive because it just keeps getting more efficient. It just keeps getting better day in and day out. And so I have no difficulty with policy loans because I view them to be an asset. Remember, I co-own the insurance company. Policy loans are a net contributor to the earnings of that company that I co-own. So if I have a choice, if I have financial energy called money, and I know that that money has to reside somewhere, where do I want it to reside? Inside of my business or someone else's? Well, logic would dictate I want my money residing in my business, and I can use someone else's capital to go and take care of all those financial objectives that I want to get achieved. Nelson said that the process of becoming your own banker is ridiculously simple. It's not meant to be sensationalized. And sometimes we interact with people where we're explaining the problem, describing the solution, and people can't see the simplicity yet, right? They haven't caught it yet. They haven't caught the essence of what becoming your own banker is all about. And so they may perceive like, what are you trying to sell me? Like, get to the point, sell it to me. Like, what exactly is it that you want to sell me? What we're wanting to do is we're wanting to unlock your thinking. We want to open up your eyes to a whole new financial world that you didn't even know existed before. I want to share the absolute importance of establishing very clear goals for yourself. I'm not talking about resolutions, okay? The enthusiasm around New Year's resolutions has probably already faded. For most people who have set New Year resolution, that has likely already faded. When you establish a goal, not only does it help you gain clarity on what exactly it is you want to achieve, but work expands to meet the time envelope allowed. So when you're very specific in that goal, in terms of a time frame, the work necessary to achieve it is going to expand to whatever time envelope you create. So if you say, I want to have my first, second, third, fourth policy, whatever that is, and I want to see an additional X amount, specific amount of money going into that policy. I want to be able to eliminate following debts. I want to be able to invest in the following things. If you don't attach a time frame to it, you're not being specific enough. It may go something like this. On or before the 15th of June, I will have opened my third and fourth policy, both of which are receiving $10,000 per year in annual premium. Those policies are in force and accumulating cash value on or before June the 15th. Is that pretty specific? And does the human brain understand that? Absolutely. With complete clarity. If I just said at some point in 2023, I want to open up my third and fourth policy and I want to put some money into it, the brain goes, okay, I don't know what you want me to do with that, but thanks for letting me know. You need a good coach. What's interesting is that the one group of people who desire it the most are people who want to be great. I want you to think about this from the perspective of team and players on a team. Average players, they want to be left alone. Good players want to be coached. Great players not only want to be coached, but they want to be told the damn truth. And so if you want to achieve greatness in building that bigger future that you committed to earlier, and if you're truly committed to doing that, you need a good coach. And the coaches on our team are absolutely outstanding because they're going to tell you the truth. And they're going to help you in any way they can to construct that bigger financial future, a future that's bigger than your financial past. There is so much advantage to coaching. You see things from a different perspective. It's not only one brain working on the problem and the solution, it's two brains working on the problem and the solution. That's always better. It's hearing the reinforcement of when you're doing things right. It's being coached when you need some guidance, when maybe you aren't doing things right. It's having someone as a sounding board who can tell you the truth and who can see that potential in you and who can be a voice of reason when you're in that state of fear or anger or frustration, uncertainty. And so get connected with a coach on our team. You never know where that relationship can lead. But I do know it's a fast track to progress. Our clients tell us all the time, they rave about our coaches all the time, because that's what we're committed to. Everyone on our team are accountable only to you, our client. And so when you get a coach on our team, you get everyone else on our team. You get the whole group. And I don't know about you, Sarblo, but if I know that I'm getting a good coach and I'm getting the whole team who's supporting that coach and making sure that I'm going to get the very best experience, you had me at hello. You know what I'm saying? Right?
Yeah, absolutely. So one of the things that, Jayson, that we do is we add value to people, whether they want to set up something personally, corporately, doesn't matter where they're in life journey. And the way we add value is by education, by coaching, by making sure that this is the right fit for them. That's where it all begins. And we have a YouTube channel. So if you haven't subscribed to the YouTube channel, hit the subscribe button, because videos like this, values like this, that's where it all ends up. So we have Banker's Vault YouTube channel. We have a podcast YouTube channel called Wealth Without Bay Street, where we interview and share great nuggets exclusively on the process of becoming a banker, the infinite banking concept.
The good thing is that you don't have to rely upon hours of operation to learn. You just need to rely upon a good internet connection. So whenever you receive inspiration to learn, just hop onto YouTube, fill your boots with as much knowledge as you can consume, and it'll always be there. That's the beauty of it.
Absolutely. And if there's anything that anybody wants us to do specific content on, please give us feedback. We will put that content out there.
People are wanting some book recommendations. There's a couple of characters out there, Jayson Lowe and Richard Canfield. These two guys, they write these books and they put these books out there on the internets, and the feedback is overwhelmingly amazing from people who read them. And Richard has the second edition, Cash Follows the Leader. And another book that I would wholeheartedly recommend to everybody right here, Be Your Future Self Now, right? We're talking about building a bigger future. And what Dr. Ben Hardy has done is he's partnered with Dan Sullivan, founder of Strategic Coach, and they're writing a series of books that's really bringing out Dan Sullivan's best thinking and giving you remarkable knowledge on how to become a better version of you. And the second book is right here, and that's titled Who Not How. And if you've ever found yourself in a situation where you come up with a new idea and you want to implement that idea, maybe you're an entrepreneur and you immediately get stuck in procrastination because your brain instantly goes to, how am I going to get this done? What Who Not How describes to you is how to rethink your thinking so that you immediately go to, hey, I've got a new idea. Who possesses the unique capabilities to help me get the how done? So now you're not procrastinating anymore because you're actively seeking the right who that can help you get the how done. And that changes everything. When you read this book, make sure you're sitting down, because you're going to absolutely change the way that you get stuff done in your company, and it's going to happen faster. It's going to get done by the right people who are naturally talented at doing the work. You're going to no longer be in a state of procrastination. So you're going to have much more energy and momentum in your business, which is by proxy going to translate into more energy in your personal life and more momentum in your personal life as well. And then the third book is what you see here, Gap in the Gain. That book is a must read, because when you make progress in your life, so if you have a goal this year and you say, you know what, I want to lose 20 pounds on or before November the 1st, and then you get to November the 1st and you've lost 15 pounds. What most people do is they say, oh my God, look at all the progress that I still have left to make. That puts you in the gap. Versus if you look back and you say, look at all the progress I've already made. I'm going to continue to bring momentum to that. And I'm not going to beat myself up because I didn't get to 20 pounds lost by November 1. I'm going to celebrate the fact that I've lost 15. I've made progress, and I'm going to continue making progress until I achieve the goal. And so those three books, I would absolutely encourage you to read. If you visit the bookstore at Ascendant, there's just an amazing shelf of books on the subject of becoming your own banker. There's not a single book in that list that I would not recommend to you. And so if you want some of my best recommendations, visit the ascendantfinancial.ca bookstore and you'll see the treasure trove of resources that we have there for you. You know, when you heard about, Taylor Swift, and she released all her concert tickets and they sold out in like 0.03 nanoseconds. That's what's going to happen for the Family Banking Summit. We are going to put on such an incredible event in the GTA, and we're going to have folks coming in from all across Canada. My 10-year-old daughter, Charlotte, is coming with me to the event. She's going to be speaking at the event, talking about the IBC youth group that's being created. We are going to bring the value big time. There will be hundreds of people in attendance at that event. It's going to be amazing. Stay tuned. If you're not already on our list, make sure you get on our list, because I can assure you it's going to sell out. And so once you get that notification, get your ticket right away. Because when we did our first Family Banking Summit in the city of Edmonton, it sold out instantly. We're speaking from a place of complete honesty here. We turned people away who decided to wait till the last minute. And so don't delay. When you get that notification, get your ticket right away, because it's going to be awesome. Last year, I did Monday night mentoring. You get to spend an hour with me for 8 consecutive Mondays, and you're coached directly from me. You will definitely amplify your bigger future if you participated in that. If you think that a Monday night mentoring 1-hour session over 8 weeks would be something that's valuable to you, and if you think that it would be a valuable use of your time, then I'll commit to that, and I'll coach you for 1 hour a week, and I'll give you my very, very best insights, my very best thinking. The testimonials from the previous session, we'll share those with you. These are real people that you can connect with and ask them what was their experience like going through that mentoring with me. I think it'll be of enormous value. We'll put a price tag on it, get it sent out to everybody. And if you want to partake, hop on board, but make sure you've got a really good seatbelt. Strap yourself in, because I'm going to coach you.
I was just thinking about your story on Amazon, Jayson, with Jonathan and the crew there. And I pulled up an image I just wanted to quickly share from when I was in Edmonton the other day. So this is me with Jonathan, an IBC client of mine and an Amazon partner for Jayson, along with Curtis. 2 great guys, both infinite bankers. And this machine is a brand new machine. I literally arrived just as they were getting this thing hooked up by the electricians. And so we were talking about, they did a quick test and they took a video of their first test. It's like a heat shrink wrap machine for individual products. And I don't know, what's the price tag on this thing? Like 28 grand or something?
34,000.
Okay. Yeah. So it's just a drop in the bucket, right? But that machine is going to improve efficiency in that business to a dramatic level, which goes directly back to ROI and the margin on all the products that they ship. It's going to make them more efficient and more lean, so that not just this year, but every future year they're in an Amazon business. So that 34 grand is going to pay for itself again and again and again and again and again. That's a clear example of an investment decision in a piece of technology and equipment that creates a continual ROI as long as that machine is in operation. Funny thing is, so Jonathan was telling me, I guess there's a bunch of really like absolutely amazing, I think, like Korean gals that work at in the shop or whatever there. I think, and they're just like, they have a heyday back there, and the guys are telling me how awesome they are. But they're gonna figure out, ask the girls to confirm like the lettering for appropriately in the language of like the Korean language, and they're gonna put like money machine, basically a Lamacoid right on the machine, because that's what it is. It just prints money basically. So anyway, they're pretty pumped about it.
There's the money plate.
Oh, the Lamacoid's on there. That's awesome.
And so in Korean, that's Dongige, and that means money machine. Our warehouse team was given the challenge to name the machine, because every machine that we add in the warehouse is going to have its own unique name. And so this first machine, that's what they named it, because that's what it is. That's what it literally is. Here's the deal. If you're in the life insurance business, so if you're an advisor, Nelson said, when you're thinking about this process of becoming your own banker, there's the seen and the unseen. And the seen is the illustration, a policy illustration, something that life insurance advisors just get so excited about. And look at this amazing policy illustration. The unseen is everything that happens outside of that policy illustration. And I just described to you something that happened outside of the illustration. That's becoming your own banker. So if you're out there in the marketplace and you're leading with the solution, the insurance policy, you're already off on the wrong foot, because unless the person understands the problem, the solution just won't matter to them. And what happens out there in the marketplace is that you have a bunch of financial professionals running around talking about how marvelous dividend paying participating whole life insurance is, and how it's better than the stock market, how it's better than real estate, how it's better than mutual funds, how it's better than Bitcoin, and so on and so on. And then they use the words infinite banking concept in the same sentence. What they don't know, because they never had the honor to spend the time that we have with Nelson Nash, we were blessed beyond the definition of good fortune, spend so much time with him. And this is coming directly from Nelson. He would say infinite banking concepts has absolutely nothing to do with life insurance. And that's what the financial sector simply does not understand. It's just a tool. And if you put the best tool for the job in the hands of an incompetent, not only are they not going to turn out any good work with the tool, they're going to break the damn tool. Infinite banking is a process. It's not a product. You can walk into a meeting with a prospect and have 58 policy illustrations. I can walk into a meeting with my voice. One of us is going to walk out of the room with a client. I don't need all the illustrations and the fancy graphs and the trying to demonstrate to the world how smart I am. All I need to do is help you understand the problem so that when the solution is presented to you, you know exactly what to do.